Hello, Nosika Online. How you guys doing? Uh-oh. Hold on. All right, Nosika, I just accidentally made you a moderator, so you're gonna have to roll with it. Let me see, pull up the chats. So I'm interested in getting into live streaming. Do I actually have anybody here? All right, I am live. Okay, I had to get outside of my Wi-Fi zone because I was walking in between. So I'm just gonna take a walk around and see maybe why the lag. All right, here we go. Hey, what's up, Brawl Street? I'll wait for a couple more people. I almost just slipped on mud. Nice mug, it's Kofifi time, exactly. So I'm interested in getting into live streaming, and I think there's a group of people that would actually like that if I started doing live streams. But I'm not really sure what people like to see when live streaming, and I'm not sure what YouTube actually lets you do either. I don't think I can actually pull up anything on my phone. I think I just have to basically take a selfie the entire time and talk. So that could be pretty challenging. So I'm interested in knowing what you guys might like to see out of a live stream, what we can do. Otherwise, I'll just sit here and take my clothes off, I guess. We can figure something out. My wife gave me a mohawk. She thinks it's very sexy. I think I look like a rooster. But I'm gonna figure it out. Make more funny videos. Okay, you want me to dump this cup on my head? That'd be pretty funny. So anyway, what I got going on, and thanks for the glasses. So what I got going on in the market right now, the way I'm seeing things, is that this is probably about the weirdest market in history, I think, at least for quite a long time. The economy is getting back on its feet very, very slowly, but the stock market itself is just flying. And it's unusual to see that. We don't expect to see, a 10% unemployment rate, and the market is just taking off like, we never had any kind of recession. The reason I think that that's happening is because who are the 10% of people that are unemployed right now? Who lost their job in this recession? It's not the rich people like it was in 2009. It's the people that are already poor. The people that aren't investing are the ones that have already lost their jobs, like the waiters, the other service industry folks. I think they're the ones that have lost their jobs, and therefore the market doesn't really care that those people have lost their jobs. The market is interested in seeing, are the big companies going to start going bust? And we saw Hertz go bust. If a cruise line were to go down, I think that would be a big hit. If an airline declares bankruptcy, that would make people realize that this recession is the real thing. But right now, the people that are losing their jobs are the ones that really aren't making a whole lot to begin with. And so the rich people don't care. So now this isn't about me being rich. My net worth is maybe $500,000 at the highest. But, oh, hey, thanks for the super chat, Jake. Have I gotten in any physical altercations? Do I look like I have because I'm wearing sunglasses and I have a mohawk? No, I haven't been in a fist fight since in college. I punched somebody as hard as I could and they didn't even know I hit them. So that would be the last time. But other than that, would have been middle school, and I won about half the time I fought. And the other half, I just kind of played it off like, oh, I didn't get hit that hard. But really, it was bad. Anyway, what I was saying, though, about the market now rising as the economy seems to be getting worse. I think that's largely because there's a disconnect between what the investors are seeing versus what's happening on the ground level. The investors are not interested in if the person who works at Chili's loses their job and is still making $600 a week in unemployment. That's fine. That's not going to hurt the economy. Or it's going to hurt the economy. It's not going to hurt the stock market. What is going to hurt the stock market is if the big companies start going bust. And I think the ones that are at risk right now are the travel industry. I'm still long Norwegian Cruise Lines right now. I've got 100 shares and I'm selling a covered call on it. I'd like to increase that position once we start seeing some more recovery in the travel industry. But right now, we're not seeing it. And if these cruise lines, these airlines don't start picking up, I don't know how much cash they have left. I think a couple of months ago, the major airlines had about 8 months of cash left in, and then they got a bailout. So they've got some liquidity for a while. But if we don't start seeing these travel companies start picking up the pace, I think one of them is eventually going to either need to seek some kind of reorganization or is going to slash more jobs. And that's when the market's going to realize that this recession isn't just a coronavirus spurred thing. This is actually a real it's a real problem for the economy. Until that happens, I don't see the market going down. So what I'm doing is picking up some leaps right now. I'm depositing more money every month, and I'm using that money mostly to buy shares, and I'm putting some of it toward leaps. If you're not familiar with leaps, that's a call option that's usually pretty deep in the money. And what that allows you to do is get a very high delta for the amount of money you're depositing. So if you wanted to buy 100 shares of SPY right now, it would cost you something like $33,000. It's very expensive. And that will give you a leap, or it'll give you a leap with a delta of 1.0. So in other words, you're in control of 100 shares, you bought 100 shares, every time the market goes up by $1, then you will make $100. It's a good arrangement. But with a leap, you can get a similar delta for about a fraction of the price. So you can buy an in-the-money call for $9,000 with a delta of 0.7. So it's the equivalent of owning 70 shares, but you didn't have to pay for all 70. Instead, you bought a call option with a high delta, and you can now leverage yourself by doing that. I feel like I didn't explain that very well, so let me just say it one more time. A leap is an in-the-money call option with a high delta. And a high delta means that you have the equivalent of that many shares. So if you have a delta of 0.6, that's the equivalent of owning 60 shares. If you have a delta of 0.1, that's the equivalent of owning 10 shares. So what I'm doing is buying leaps with a delta of like 0.7 or 0.8 on SPY. So it's the equivalent of owning 80 shares, but you don't have to spend all that money on what it would cost you to buy it. You could get away with spending $8,000 to own 60 shares of SPY instead of having to actually buy it, which would be like, what, $24,000? So, and yes, Earl brings up a good point. A leap is usually several years out. So what I'm doing with SPY right now is buying leaps that don't expire until the end of 2022. So I've got, what is that, almost 2 years, more than 2 years left on the leaps before they expire. Technically, it's a call option, so it will expire eventually. But if it's already in the money, it's got a high delta, and I've got several years for SPY to keep rising, that's pretty darn good. So that's my good arrangement. And Nosika asks, do I plan on closing the leaps before 2022? So I'm probably going to, but it's gonna be pretty darn close to 2022. So it might be, around probably March of 2022. I'm gonna start looking to roll those options. So they should give me the opportunity to, right now they're already up substantially, and I assume by 2022 they'll be up even more. So right now I have 250 calls, the strike is 250. If I were to sell those at some point in 2022, and then buy something with a strike 100, 50, 100 strikes higher, like 350, then it'll cost me the same 6,000 or so it originally cost me to buy the 250 strikes in 2020. Now I can take a whole bunch of profit and then spend that same $6,000 per leap in March 2022. I just have to roll the strike higher. I hope that made sense. So I will look to close it before expiration for sure. I might exercise one of them if I can hold a bunch of them until then, because I do want exposure to SPY. But I will look to continue working with leaps. I think those are a great option for people that have that medium-sized account. If you've got the, $15,000, $20,000, $25,000 sized account, and you want to take 30% of it, buy yourself a leap. It's pretty awesome. There's a couple questions going on here. Am I doing the 3K challenge? Yes, I planned on doing that today. I planned on setting up the trade for the 3K challenge today, but I got kicked out of the house because my wife is doing an interview, and I distract her and confuse her when she's there. So I'm walking around in my backyard now. A couple more questions. People ask me about precious metals. So I usually don't play in precious metals because I'm not an expert on them, but what I do see is demand continuing to rise along with the stock price, and nobody's really digging up more metal than they used to. I think, in fact, metal excavation or metal mining has probably been flat or even down over the past decade, and demand is rising for them. So I think that those are still a good play. All right, Starbucks and Disney. So funny that you should mention Starbucks and Disney, because I am, my wife and I together with her Roth, we sold puts on both. We sold puts on Starbucks, and we sold puts on Disney. Both of them are up right now, which means that there's, obviously the stocks are both rising. I don't think that Disney has any real long-term threats to it. It's just going to keep getting larger and stronger, especially with this acquisition of ESPN. I mean, once we have the sports coming back, which they're starting to now, but once they start really getting back into it, Disney is going to start seeing more of that revenue come through. The parks are reopening. I mean, there's really not a whole lot against Disney unless you think that they're not going to be able to continue producing movies for a long time because of this coronavirus thing. I think that's more likely to be the opposite. I think they're going to start really, there's pent-up demand for theme parks, pent-up demand for Disney cruises. Once all those start getting back into business, I think we'll see more out of Disney. And Starbucks is a Becky stock. You can't vote against Becky stocks. They're always going to go up. So, what else we got here? So what's my other career? I am a cartographer for the government. So I look at maps a lot, lots of mapping. It does get boring, but sometimes it's interesting. Like, I know the face of the earth better than pretty much anybody I know because it's my job and I get paid to do it. So it's pretty cool. Matthew J wants to go 140 strike for June on Disney. I think that's a pretty good play. It might be a little bit expensive because it's a pretty far leap. That's basically a leap. But I think that's good. I'd probably look for a slightly lower stock price, or a strike price rather, because if the market continues to rise and carries Disney with it, I want to start seeing the benefit of those leaps right away. I don't want to wait until the stock reaches another $10, $15 higher first. So I would be looking at a lower strike price, but it's going to be more expensive to buy a leap lower. Yes, I do live in the DC area. I live in between Alexandria, and I live on basically the west side of Alexandria. These might be female glasses. I just took the first ones I saw, but I think they look pretty good, so I'm not sweating it too much. All right, so Kashik Kancharla brings up the idea about Tesla. So here's a trade I've been interested in about Tesla. So we know there's a lot of demand for Tesla vehicles. Stock price is extremely, extremely high, pretty overpriced. I'm worried about seeing some additional downside from it. We came off of that high. I think it reached like $1,700 at one point. Now it's down to around 14.5. I still think it's overpriced, but I love the idea of collecting premium in the short term by selling calls and selling puts. So here's the trade I came up with. I'm calling it the Sonic spread because it uses a wheel strategy with a hedge underneath it. And what has hedges and wheels is Sonic, the hedgehog. So it's called the Sonic spread. You start by buying a long-term put leap at the money. So I'd be looking at buying a put expiring sometime in 2022 at the $14.50 strike price. So that would be something, it's going to cost a lot. It would be like $40,000 to buy that put. Now you are going to wheel at the same stock price. So I'm going to sell a Tesla put for like $7,000 a week. I'm going to sell Tesla calls and puts by wheeling at the $14.50 strike price. Within, 3 months, you've probably already collected enough premium doing that to pay for that long-term put that you just got. After that, it's free money. You've already protected yourself from downside by buying that put. You have made back the amount of money you had to spend to buy the put by wheeling at the 1400 strike. And now if you want to sell the put, that's all profit now. Or you can continue wheeling and you now have zero risk. Your max gain, your basis rather, is $0. So it can turn into this cash cow. Problem is, to enter a trade like that on Tesla, it's going to cost you something like almost $200,000. It would be like $190,000. That's like more than half of my account. So I'm not going to do that with Tesla. What I am going to do is I'm going to... All right, am I back? Can you guys see me now? I'll wait for the comments to come through. I lost connection with you. All right, thanks, Super Radish. I'm back. What I was saying about space, I don't know if you guys caught it. I want to try the Sonic spread on Tesla, but it's too expensive. So what I think I'm going to do is attempt to do it on space instead, because it's the similar security where I think there's a lot of downside ahead. There's a lot of risk. But at the same time, there is a lot of premium to be made on the short-term options. So when I have time today, I'm going to go look at it, and I'm going to buy a put, I think Space 22, and then I'm going to wheel at that same price. And unlike the $200,000 it would cost to enter a spread like that with Tesla, I think it's going to cost something like you know, $1,000 to enter it with space. So the Sonic spread could be a good strategy. I have to test it out first. I know people have said, why don't I just back test it? And the reason for that is because when you're back testing, I think you have the temptation to try to find an All right, I'm going back toward my front door so that I can get on Wi-Fi and I don't have to do this anymore because I'm sick of cutting out and losing viewers every time that happens. So, all right. I'm gonna do this from my porch instead. All right, how's that? I can't see shit right now. It's too daggone bright. But, all right. I'll try it from here. Anyway, that's my thoughts on the Sonic spread. I'd be interested in what you guys have to say about it. I was running like Sonic. Good point, Connor. You could also do it upside down and do what I call a shadow spread, because shadow is like the opposite of Sonic, where instead of buying the long-term put to prevent downside, you know, to protect yourself against downside risk, instead you buy a long-term call and then sell calls as part of the wheel. So, problem with that is you're selling naked calls. You know, you're hedged against it by having the long call, but in the short term, you're selling naked calls. You're willing to take a short position if you were assigned. Not everybody's willing to do that. I don't like to do that. But if you have no problem taking a short position, then a shadow spread is an option. If you think a stop. All right, am I back? I am now sitting right next to my Wi-Fi router. Should I take this off? I'm gonna sit here next to my Wi-Fi router. All right. So anyway, somebody throw a question at me because I kind of ran out of things to talk about right now. Unless you just want me to talk about what's in my portfolio. Yes, Lord Farquaad, there will be a Sonic video. I'm gonna do the next strategy is going to be the poor man's covered call. And in order to do that, I need to first do a video on the Greeks. So the next strategy type one is going to be the Greeks, then the poor man's covered call. Then I'm either going to do the Sonic spread, or I might do the Jade Lizard and Twisted Sister, which are like super wheels. All right, am I back? I keep losing connection and I don't know why. I'm sorry, guys. It's killing me right now. Maybe I need faster internet. And thank you, Informed Trades, for the super chat. Guys, check out his channel too. He's got a lot of great stuff going on, especially for the small portfolios. If you're all about it, if you want to make money off of a small portfolio, check out Informed Trades. He's got his own channel. It's good stuff. We did an interview at one point. It was months ago now. I haven't really talked to him since, but I would love to do another interview if you're down for it. Maybe I'll get you on my channel this time. It could be my phone overheating, actually, Alex. It's a good point. This phone is very hot right now. But anyway, yeah, I was talking about the Sonic strategy. So the next one I'm going to do, I want to do the PMCC next, the poor man's covered call, because I'm loving that one for the small portfolios. But in order to do that, I've got to do the Theta video, or the video on the Greeks first. So I've got a video, I've already got the script done. I need to record it and make the video. That'll be on the Greeks first. Next, I'll do the poor man's covered call. And then I'm either going to do the Sonic spread, or I'm going to do the Jade Lizard and Twisted Sister. I haven't decided which one yet. Jade Lizard and Twisted Sister are like putting your wheels on steroids. And with how popular the wheel is, those are strategies I want to showcase. So it'll be one of those. But the Sonic spread is going to come, especially if it works out here. You know, I have to try it out this week, and I want to make sure I can get a good example before I start putting it out there as like the best strategy. But I'm excited about it, so I think it's good. All right, what else? There was something else somebody asked I wanted to get back to, but it went off the screen. So, but anyway, what's in my portfolio right now is mostly it's mostly index funds. The Leaps on SPY, I have the equivalent of about 240 shares through Leaps. Might be a little bit higher now because it's kept rising. So maybe it's like 250 shares ish. And then I've got 450 shares of Triple Q that I don't trade, and I just leave them there. And then with the rest of my portfolio, I'm selling covered calls against, you know, a whole bunch of different stocks. My favorites right now for wheeling are Energy Transfer, which has been That's the stock that I'd be willing to hold long term. So I'm wheeling that one. I'm wheeling Nvidia. I'm wheeling AT&T, and I want to get another SPY wheel going. So those are the big ones. And I've got a bunch of other little like ticky-tacky stuff that I'm starting to build up positions in. I'm becoming more interested in dividend investing at this point because I'm starting to see the light at the end of the tunnel. If I keep pulling dividend, I keep wheeling and collecting premium, then I'm getting to the point where I could presumably quit my day job. And if that happens, then we'll have a whole bunch more of these videos, and I think I can even go much further with YouTube than I have. I need to get on Twitch also. People keep talking about Twitch like it's the thing to do. So we'll try live streams on there, and then I have more time to make videos. YouTube has not been that great over the past month or two because I haven't really made videos. It's killing me because I know they bring a lot of value to people. It makes me very happy when I see people telling me that, I started wheeling and all of a sudden I went from down 20% on my portfolio. Now I'm back to break even and I'm looking for gains next month. Like, that makes me happy. So I want to see more of that. But I need time to do it. And with the way my work schedule is going right now, I don't have the same time I used to have. And it frustrates me. All right, Matthew J. If you believe there's about 10, 15 upside above the strike, how much would I be willing to pay in premium for long dated? So he's asking, if I think a stock is going to go up, is it okay to buy out of the money leaps? And how much would I be willing to pay? I mean, that's a tough question because there's really no wrong answer in that situation. If you think a stock is going to go up substantially, then there's nothing wrong with buying out of the money leaps. It's okay to do that. The problem is, in the short term, you're not going to see those significant gains like you would versus if you had bought an at the money or an in the money call. So if you're buying out of the money calls, you might get a delta of 0.3. So if in the near term stock goes up $10, you're not going to see a $800 gain. You might see a $300 gain, and that's fine if you plan on holding until the leap expires. It's not going to bother. It's not going to matter if I made 500 versus 200 today. That's fine. What I like to do is buy as much delta as I can afford if I'm that convicted about the stock. So if I can afford 4 leaps with a 0.8 delta, that's better for me than buying 7 leaps with a 0.2 delta, because you're getting a higher delta for the same amount of money by buying the at the money options. I hope that makes sense. So to make short answer, buy whatever delta you want and can afford, but make sure you do your math and you're figuring out where your highest delta is. Another question, have I ever been arrested? No, I haven't. I've been in a cop car once because my friend thought a cop thought my friend threw a brick at a building. Really, the building just collapsed because it was very old. But he got thrown in the back of a cop car and I went with him, I guess, because I was there. So that's probably the closest I've been to getting arrested, fortunately. I've gotten like 4 tickets. 1 for going to the beach at night, 1 because my friend stuck his head too far out the window, 2 parking tickets. So I'm not very badass when it comes to stuff like that. I've gotten away with a couple things, but that's it. All right, trying to do strategies in my Roth, wheel stocks, cost $20, hard to get approved. Okay. If your broker isn't getting back to you about getting your options approved, ask for level 1 option strategies, because that's a covered call. I may approve everybody for that, so at least that'll get you started with it. And the question, all right, about the Jade Lizard and the Twisted Sister. So they're derivatives. They're similar to wheeling, but you add a little bit to it. Think about this: if you sell a put because you want to start a wheel, so you sell a cash secured put, and the stock goes up, right? You're going to collect the full premium. Okay, now what if in addition to selling a put, you also sold a call at a much higher strike, and then you bought a call higher than that? So now you have added a call credit spread on top of your short put. So if the stock winds up in the middle of those 2 strikes, the short put and the short call, you made your max profit on the short put, and you made your max profit on the call credit spread. All right. Now, this brings up the question, what if the stock goes up too much and it busts my whole call credit spread? Now I'm looking at a whole 100% loss on the call credit spread. Now, if you just did the call credit spread, you would be at a loss. But in the Jade Lizard, you've also sold a put And the premium you got by selling the put will offset all of the loss from that call credit spread. So what you've now done is given yourself a situation where you've sold a put. All right, you're willing to take assignment and wheel if the stock goes down. That's why you did a Jade Lizard. If the stock winds up just above your short put, then you'll make the full premium for the short put and the full premium for the call credit spread. If the stock goes up too much, you may have lost on your call credit spread, but the short put that you sold will offset all the loss on the call credit spread. Therefore, you've got no risk to the upside. All right? You really want that stock to stay right in the middle between those call and put. But what if it goes down? Okay, well, we already said that we're willing to take assignment. That's why we did a Jade Lizard. It's part of the wheel. So we'll take assignment, but if the stock goes down, then we also pull the call credit spread's max profit. So not only did we get assigned like we planned on doing, but now we've also got full premium from the call credit spread that we can then reinvest into shares, or we can use it for other options, whatever you want to do. And then thank you again for the super chat, Informed Trades. Season 2 of the 3K challenge is going to start. I'm aiming for the end of this month. I really want to put the trade on this week so I can start reporting, and then I can go ahead and make the video toward the end of the month when the trade expires. So that's what I plan on doing. I hope I can do it. I'm going to be pretty crunched on time, but at the latest, it's going to be maybe the first week of September. I was hoping to get started earlier than that, but my work schedule picked up so much that it's like, do I make videos or do I go to work? So, I can't skip work, even though I kind of want to get fired so I can just collect unemployment plus the extra money that you get for being unemployed while making YouTube videos. I could probably even do better than I do at work. But, if it were just me, I'd have tried it already. And I got the wife and daughter, it's too much risk. So, but it's coming, I promise. I have not given up on the 3K challenge. Alright, Scritch asks, am I associated with Junie? So the original plan was, I was going to do, the majority of YouTube. Junie was going to do the majority, or he was going to make his website. He would run the website, I would run YouTube, and then Mr. Ivy, who you guys may know, he does a lot of the background stuff, and he also manages the Discord. So that was kind of the little triumvirate we had going on. But Junie wanted to go in a little bit different direction with a more mature audience. He liked my videos, but he didn't think that they were really going to... No, you guys can't really hear me? All right. I'm going to turn up a little bit. Anyway, the plan was to have Junie run the website, I would run the YouTube, Mr. Ivy would run the Discord, and do a lot of the background stuff on top of it. He's like the best person ever when it comes to stuff like that. But Junie wanted to go in a different direction because he liked my videos, but didn't think that they were really mature enough. He wanted a more mature audience to connect with. So, he ended up breaking away from both of us. I don't think Mr. Ivy talks to him now either. But he gave me control of the Discord, then I gave it to Mr. Ivy. And Junie does his own thing on his website. And I'll occasionally tune in just to see what's going on over there. He seems to be doing well, so, I wish him the best. I wish we could have, stayed a team, but that's all right. He's got his own thing going on. We're both doing fine, so can't resent it at all. All right, up to 140 viewers now, and I haven't lost connection in like 10 minutes, so that makes me happy. I do want to do another dank trade soon. I was hoping that, coronavirus would be pretty much settled by now so that I can make a sickest trades of the pandemic video, but coronavirus just keeps going on, so whatever. I think in terms of numbers, the boring videos do better because beginners will click on them. Yeah, maybe. I know that the 3K challenge is like the most popular series, and pretty much everybody I talked to is like, yo, I found your video on the 3K challenge. I think those 3K challenge videos suck, and I think they're super boring, but everybody else loves them, so I'm not going to stop doing them. I think the Dank Trades video is my favorite series, and then I like the education ones too, because those are pretty timeless. Everybody's going to want to wheel from this point forward, so I'm all about it. Alright, thanks David. I love hearing that my videos were helpful. I hope you're on the Discord too. You can always catch us there. Always got a couple of trades going on right now. Who's going to buy TikTok? What's my... Alright, Ellen asked, what's my background? Oh, you mean like, not what's behind me, you mean like my ethnic background? So I'm Italian, mostly. I thought you were asking me like what's behind me. It's just the wall in my bedroom, my wife's dresser. So. But my background, as far as like in the U.S., I was born in New Jersey, went to college in Virginia. I was in the Army for several years, and then after I got out, I moved to D.C. for a job. I helped Jordan discover Wall Street bets. That's like the opposite of what I hoped to do. I hoped to pull people off of Wall Street bets and bring them into Theta Gang, but hey, whatever works. So, what else you guys want to talk about? Give me something. I wasn't planning on doing a half-hour-long live stream. But, no, Dankman, you do not have to pay for access to the Discord. There is a Patreon, so you can get, if you want more access to me and my trades, you can join Patreon, and that has its own channel on the Discord. But you don't have to. I mean, it's all completely free if you want to. So, Alan asked again, what's my background? Italian. And Dankman said, could we get a talk about the Illuminati? No, we can't. And B asked, what's my career background? I was in the Army for about 6 years. I was an intelligence analyst, so like enemy expert type thing, mostly in Europe and then in Korea. And I came back here, I'm a cartographer now. So I spend a lot of time looking at maps. I don't recommend short-term calls on Apple unless you mean, 3 months short-term. Then in that case, yes. I think that once Apple splits, every share becomes 4 shares. Every option becomes a split adjusted position that's now representing 400 shares. I think there's a lot of value there because more people are going to want to get on Apple. But right now, they're almost priced out of the market. Apple has gone up so tremendously in the past couple of years that people that wanted to get into it at like 250, they're now priced out at 450. So I think the split is going to help people get the exposure that they want to. And all those split adjusted shares and split adjusted options are going to, there's tremendous liquidity and there's also a lot of money to be made. So I do recommend any short-term options at least get to the 2-month point beyond the split. That's why I'm buying leaps. I want exposure to Apple in the long term, and I'd like to do it on a split adjusted basis too. So that one leap that I've bought today is going to represent 400 shares. So it would be a split adjusted one, and the delta would be like 4.0. So a very high delta. It's real good. Eric, thank you so much for the super chat. He asks, what's your thoughts on gold and the US dollar? Am I buying gold? Well, I've looked at gold several times. I keep telling myself I'm going to get in on the next pullback, and it never pulls back. I think that's because there's a lot of concern about the fundamentals of the economy right now, and people still want gold and silver, even though the market is rising. So I think if you are a type of person who's willing to take a long position in gold, do it now. Don't look back. Don't do what I did and say I'm going to get in when it goes down, because it may or may not. We don't get to decide when that happens. And don't be in my position where I wish I had bought gold weeks ago. So you could also buy puts on dust. That's a good one. And then what's the triple ETF for gold? I think it's JNUG, or that might be the double one. You could get into gold by using an ETF or a leveraged ETF. That way you don't need to put up as much money. It's more risk in the short term, but instead of putting up $10,000 on a 1x leveraged ETF, you can buy a triple leveraged ETF if you want to get it with a shorter amount. You get the same exposure. Intel Leap versus Apple Leap, which one would you prefer? So Fanka, I actually have both right now. I've got the Apple Leaps, and I've got a couple of Intel Leaps right now. Basically because I'm banking on Intel getting its shit together, which so far they haven't done. I know they had one of their flagship chips were delayed, but I did buy a couple of Leaps because it's Intel. They're going to get their shit together. They do a lot more than just PCs. So even though we talk about Nvidia is carving away market share from Apple from Intel all the time, they're only carving away market share from Intel in PCs. They're not carving away market share in servers and larger machines like that. Intel still runs that space. So I think the market had a real knee-jerk reaction when they knocked that thing down like 25% over a delayed chip. So I am picking up, I already have a couple of leaps on Intel. I'm probably going to do some more than that. But right now I think Intel leaps are a good option and Apple leaps are a good option. If I had to pick one, I'd probably pick Apple. But if you can get both, get both. And I'm enjoying it so far. Voltage says this is a long game, not a speculative pump. So if you're talking about the market continuing to rise despite the fundamentals not being behind it, I think that might be true, that people are just looking past coronavirus, looking past the recession, because everybody expects this to be a short-term event. I think that's probably true. I don't think this is a speculative pump. I think people really are looking past it, where all kinds of news is going to be interpreted as good news. Anything short of the market completely, or the economy completely going under, that anything less than that is going to be attributed to good news, because the bar is set so low right now for all these companies with earnings. You know, companies lost $100 billion, but hey, they didn't lose 120 billion like the market expected. So good news, the market goes up. So that's all about it. All right, so more people have asked if I plan on doing season 2 of the 3K challenge. The answer to that is yes, I do. I planned on making the trade today. I might end up making the trade tomorrow instead. But my goal is to have the series kicked off with the first video by the end of the month, at the latest the first week of September. I got delayed a little bit because my job picked up, started pulling more people back into work more than I expected. So we're all going there to get coronavirus, and as soon as I do, then that'll give me some time off that I can go and work on videos. Lots of talk about crypto right now. Oh, and another super chat from Informed Trades. Thank you so much. What do I think about electric vehicle stocks like Nikola? So, I love electric cars. I want to get myself a self-driving one. I think that's that's the way the car industry is going. I don't know enough about the fundamentals of Nikola to say it's time to get on it. I do love the industry though. So if you look at the fundamentals of the company and you say, all right, it's actually getting sales, which is extremely important, and it has enough money to sustain itself for the long term, then yes, go ahead and buy shares. I don't know if Nikola has that because I haven't looked at it yet. And I would certainly shy away from NEO. I think NEO is kind of just a junior varsity team. That's where it's going to stay. If you want to get into electric cars and you have enough money to do it, I would say that Tesla is going to make it there before anybody else will. I mean, they kind of already have. They're actually the only ones that are profitable so far. But Tesla also has a level of diversity that you don't get from those other places. You know, you've got, they've got their solar thing going on. It's got the same brainchild as SpaceX. So I think they're not going to merge, but I think they're going to start working together a little bit more. And you've got a lot of computer technology behind Tesla too. It's not just the cars. They're the ones that are really building the technology. So I think all that self-driving, automated type stuff is going to find its way into other industries too. So I think there's a lot of options in there. But yes, as far as electric vehicles themselves go, love it. I would want to get one so bad. As soon as they start getting the self-driving features, then it's happening. All about it. So Brian asks, am I on Webull or Robinhood? So I'm on Webull and Robinhood and Merrill Lynch. So Merrill Lynch has my IRAs and the bigger part of my non-retirement portfolio because I want that level of cash to be with a physical bank that I can go to, and I feel better knowing that there's a brick and mortar behind it. So they've got a lot of my money. I'm slowly making deposits into Webull. So there's about 25,000 in there right now. I'm mostly using it just for wheels, like the long-term wheels that I don't really want to look at every day. I'm not interested in the short-term price fluctuations, but I still want exposure to these companies. So I've got Disney in there. I've got some dividend payers like Tyson. I'm putting those into Webull just to leave them there. And then Robinhood I use specifically for the 3K challenge and for like demonstrating options plays, because they've still got the best user interface. You know, even though it's probably one of the worst brokers ever, the interface is phenomenal, and that's kind of what makes them valuable. Webull, so there's a lot of speculation now. Webull, is it Chinese spyware? No, I don't agree with that, because they do have the same exact regulations. They have a U.S. branch. They have the same regulations as all the other U.S. companies. So I don't think that it's spyware. I think, if anything, if you were laundering money through China, they might recognize it more. I don't recommend using them for your IRA just because, you know, you want a brick and mortar organization to handle your IRAs. But if you've got like a smaller account or you want to use the platform for the research tools, it really is good. You know, they've got phenomenal research tools on Webull that you just don't get anywhere else without paying for it. So that's what I'm all about. That's kind of the main reason why I'm on Webull. I know there's a thousand other ones. I wish something would work on for international folks, that you don't have to pay $20 every time you want to make a trade. Like, I'm hearing about Quest Trade. People are paying like $500 for a big options play. That's absurd. So I would love to see one of these companies get on board, start catering to the international market. You know, we're saturated with options in the US. I love it. Don't get me wrong. I love the fact that I can pick just about any broker in the US, and it's going to be super cheap to make trades. But I want to see that international market get entertained. So far they haven't. It's like, you know, frustrating for me. I want to see those people get taken care of. The US isn't the only country in the world. But anyway. Douglas says I'm being too loud. I don't know, he was talking about something else. But all right, Charles asks, I would love to hear what you have to say about MGM. Got assigned at 20, wrote it down, selling covered calls, finally back on top. So first, you did it right. You know, if you get assigned on something like that, then just sell the covered calls at your basis. MGM, it's a pretty darn big company. Right near where I live, they've got this ginormous resort that I don't know what it's for, but it's huge. I mean, they're not going to go bankrupt anytime soon. So continue selling covered calls at your basis. As far as the prospects, I think they're kind of in the same boat as a lot of these other travel type companies, travel and leisure. They have a lot of short-term problems. You know, people aren't traveling, they're not staying in these types of resorts. They're not having the big corporate events. You know, they probably made a ton of their money off of these corporate events at their conference halls and things like that. They're not going to see that for a while, a couple of years. If you're confident in the company and you're willing to bag hold for a while, I think if you can get in now, and you're willing to hold until the stock goes back up years from now, phenomenal price to get in. So I would just keep doing what you're doing, sell covered calls at your basis. You said you're already back on top, so that's good. Take that premium and either reinvest it into the same company or pick a similar company, just to spread it out a little bit. But as you're selling this premium, when the stock starts rising, you're gonna get a higher delta because now you own shares on top of it, and dividend. I don't know if they pay one right now, I think they did at one point. Once that comes back, then you're looking at a real good position. So that's my opinion. So Brian says, what's my position on Tesla? Right now I don't have one. I bought shares at 200 and sold at 350 and I felt like a genius. Now I feel like an idiot. But if I were to take a position now in Tesla, it would be the Sonic spread. I owe you a video on that, but you're basically wheeling on top of a long-term put as a hedge. Because I think there is some risk of major downside in the future. But there's always going to be demand for Tesla at this price because it's reached it before. So I would be comfortable taking a wheel on Tesla with a long-term put as a hedge. And I call that the Sonic spread. I'm going to make a video on it eventually. Scritch asks, what are the main things I look at before wheeling a stock? The first and most important thing is that you actually want to own the shares of the company. People make the mistake all the time of looking at it and saying, hey, I can get a 5% yield every week if I wheel this stock. Maybe, but if there's a 5% yield every week, there's a reason for it. It means there's either a major risk coming up, or the market is overvaluing something, there's too high a demand for risk. There's a reason why yields are very high. Look at the fundamentals. Make sure that, one, the company has a positive price to earnings ratio, means it's actually making money. Two, I want to see that at least over the past several years, the company has higher revenue than it's had previously. I don't care quite as much about earnings if I think it's going to stay solvent and continue growing, but I do care to see that revenue is increasing year over year. Those are extremely important. Positive price to earnings ratio, company is increasing revenue, and if it's got a dividend, I'll feel very good about it. Because if a company's paying a dividend, that means it believes that it's going to continue growing, it's going to continue to have the money to give back to its shareholders. And if you do get assigned on a short put and you have to hold shares, now you've got the option as well to just sit on it and collect dividend. So if I see dividend, positive price to earnings, and the revenue continues rising year over year, then I'll go for it. I think that's the three most important things. If I see those, I'm comfortable holding shares, and if I'm comfortable holding shares, I'm comfortable selling options against it. And then I'll reinvest that premium back in. Another super chat from Foreign Trades to do the best. Your favorite stocks to wheel or buy FDs. So favorite stocks for wheel are probably going to stay Prudential, Nvidia, SPY, Energy Transfer, for a while AMD, but AMD has gone up so much that I don't know if I want to put that $9,000 for one wheel anymore. But if you're down with that, then AMD is always a good one. And hey, Robert Bullock said NLY, so I'm actually wheeling NLY right now too. So that's another good one. Most important thing, like I've said before, you need to get onto something that you actually want to hold shares with. There's white noise on the sound side. I think it's this thing. Get rid of it. Anyway, what I was saying, the most important thing about picking a wheel is that you're grabbing something with a price to earnings ratio, a dividend, and growing revenue that you actually want. Just make sure that when you're picking those dividend ones, that you're not selling covered calls at dividend time. You want it to expire prior to the dividend. Otherwise, you're at risk of getting assigned to sell shares right ahead of the dividend. And that can be really frustrating when it happens. So keep that in mind if you're selling them. My favorite ones: SPY, NVIDIA, AMD, sometimes Energy Transfer, NLY, Disney, Starbucks, and there was one more that I'm forgetting. Oh, and GameStop. I'm actually really enjoying wheeling GameStop. And I didn't think I would, because GameStop is kind of like this dying company, but they just keep paying me, and the stock price always stays between 4 and 450. If it goes down to 380, buy more. This is going to go back up to 4 to 450. It's a penny stock. And I usually don't like wheeling penny stocks. I don't even want to touch them. But GameStop is my exception. So I'm happy with that one too. It's just I wouldn't put a big position in it, because that thing's liable to crash at any time. I've already covered almost my entire basis just by selling covered calls and cash secured puts on it. So GameStop, if you're really hard up for cash and you don't want to pick an expensive stock, you can do that one too. But AMD is probably the most exciting of that bunch. Except you'd be better off just buying FDs on AMD at this point. I mean, they just keep going up. And Apple too. I sold a covered call on Apple and got assigned around $300 a couple of years ago. And I'm like devastated about it, because instead of having 115 shares, I could have had 215 or 215, which would have turned into what, 860 shares after the split. Would have been nice. I only caught the last part of that last comment. I think it was, do I ever buy FDs? I don't buy a lot of naked FDs, but sometimes what I will do is sell an option, take the premium for it, and then buy a call or buy a put out of the money. So if I'm selling a call on, let's say, Disney, all right, I collected $300 in premium from selling a covered call. I might take 150 of that and buy a call, 10 strikes higher. That way, if the stock does rise, I'm getting some value out of that long call. If it goes down, I'm also pulling, some money from that too. Oh, somebody sent me a super chat, but I couldn't read the comment because too many people commented. All right, Charles Robinson, he said, thanks for all the tutorials, hands down the best channel on YouTube. I love being in the house earning slow profits that again, I have to say. Thanks for the super chat, Robert, I really do appreciate that. And thanks for the kind words too. I love when people say they made the switch over from buying FDs to selling puts, because there's so much value in selling puts and calls and doing spreads. And it's especially valuable for the small trader too, because you can't consistently make money with FDs unless you're really, really lucky. So it's like walking through a minefield with a pot of gold on the other side. Do you want to be the person walking toward that pot of gold, or do you want to be the minefield? I want to be the minefield, because I want that continuous money from premiums that I can keep reinvesting. That's what makes the whole thing so valuable, is that you can see it consistently. And that slow growth is always going to beat that long calls and long puts type FD buying. So Robert says, remember that SPY always wants to go higher. Yes, that's true. There is always an upward bias in the market. So if I'm wheeling SPY, I'm usually selling an in-the-money put and selling out of the money calls. So that way I've always got an upward bias to it. If you sell in-the-money puts, that means that you're going to get more money from the premium, and you're more likely to get assigned, which is what you want. You want shares, because SPY is going to go up. It's just what it does in the long term, because you've got all these pressures underneath it. Inflationary, stocks just rise over long term. That's just what they do. So buy SPY, and you want to hold those shares. When I'm selling covered calls, I sell calls out of the money, because I think the stock is going to continue to rise. It's just what SPY does. But if I sell well out of the money, that gives me the option that I can root for the stock, and if it does get exercised, I'm at least in a better position to sell puts at that same strike. So people have been asking, what do I do for work outside of making YouTube videos? So I'm a cartographer for the government. So I spend a lot of time looking at maps. Some days it's really exciting, and some days it's not so exciting. It just depends on what's going on those days. Like when Lebanon had that big explosion, exciting day for the wrong reasons, but it was interesting. And then days like yesterday where I literally do nothing the entire day, just staring at maps. So it has its ups and downs. What I'd like to do is get to the point where I don't have to do that job anymore, but I think I'm probably still a year or so away from that, unless I can get this to where it's full-time work, which would be challenging. I don't know what Paradox Games is, but maybe. Mostly what I'm doing at work is staring around at maps, waiting for something interesting to happen. And most days it doesn't. but I still get paid the whole time regardless of how much work I'm doing, so it's not too bad. Yeah. It can be interesting sometimes, as but not always. Right now I'm still renting my house in a high cost of living area because I'm near DC. So, putting a lot of, I came here chasing a high paycheck, got it, and now I've got to either spend 800 grand on a house or I've got to pay for high rent. It's frustrating. So for just me, I would pick like some one-bedroom apartment with roommates, and I'd just keep all the money that I got from work and reinvest it into stocks. But when you have a family, there's a lot of people counting on you to do more than that. So that's where I'm at right now. And I've got the wife and the daughter. We need a house, so that's what I'm doing. And Becky, my daughter's name's Rebecca, which is Becky, and then now we call her Buka. Somehow Buka came from Becky. She's 8 months old, so she's sleeping right now, and that's how I have time to actually make this video. Otherwise, I'm babysitting because my wife is at a job orientation today and wanted me out of the way because I make her nervous. Whatever. So, somebody's got their rent money on Link. What is Chainlink? Somebody explain that to me. Why is that such a popular cryptocurrency right now? I got out of cryptocurrencies mostly when that big crash happened in 2018. I still hold a little bit. I've got some Tezos just because they pay you interest. I've got a tiny bit of Bitcoin, but what's up with why is everybody so super excited about Chainlink now? I know it's gone up, but what does it do? I don't really see anything that these cryptocurrencies do that energy transfers can't do. All right, mention my Twitch and I'll link it in the chat. Okay, thanks, Brawl Street. So I have a Twitch channel that I haven't really broadcast on yet because I'm still learning how to set it up. Hop91, that's Brawl Street. He's going to help me at some point get this channel up and running and show me how to actually use the platform. But I do have the channel. If you guys want to get on board with it now, then you'll get the alerts once I actually start doing this. We're going to have video game and chill type situation where it's going to be like this, except instead of just a background behind me, I'm going to be playing Banjo-Kazooie or whatever. So we'll have some fun with it and we can just talk stocks. And I'm also going to have portfolio reviews where we'll go through, I'll do some day trading, I'll show off what I've got in my big boy account. Interesting stuff. So I hope that type of thing appeals to you guys. I don't know if Brawl Street, can you put a link somewhere in here? I don't know if you can do that. But if you can, yeah, go for it. And maybe we'll build up a little bit of an audience before I get started. Somebody asked me a question, I just forgot what it was, but it was an interesting one. I think it was about, am I MMA and do I lift? So I used to lift. I used to be in really great shape. I used to be freaking shredded. Now I've got some stomach here, but it used to be I used to be rock solid, man. And then I got married and had a baby, and all that went right out the window. So when I look at pictures of myself from 2013, I look strong and healthy. It kind of breaks my heart a little bit to see where I am now. But I do still lift occasionally, not a whole lot anymore. And I definitely don't do MMA. I'm probably not somebody who's going to be good at fighting just because I'm not tall enough to really reach. But I do like martial arts as a fitness type thing. So I've got my punching bag. I can throw a decent punch, but I'm not really all about the fighting style. And, alright, do I ever buy back covered calls or puts when they go in the wrong direction? So what I do, if the trade goes against me, I've sold a covered call and the stock went too high, I don't necessarily just want to give up the shares and start wheeling. I don't want to keep these shares for a couple of reasons. Maybe I've already had it for 8 months now and I want to get to the point where I've got, the dividends are now qualified. I'm getting closer to that long-term capital gains tax. Maybe there's a dividend coming up. I don't necessarily want to lose these shares by having a covered call expire in the month. What you can do instead of buying it back is what's called rolling. So you'll buy back your covered call and then sell a covered call at the same strike that expires later. So if I'm buying back this Friday's covered call at $50 strike, I will buy that one back and then sell next week's $50 call at, for a higher amount of premium. Since it expires later, it's going to have higher premium. That way you end up with a credit. Now, if I'm buying back this week's for $100, I'm going to sell next week's at the same strike for $130. That way I've picked up $30, I've got more credit, and if the stock does come back down, now I've got a whole $130 of premium riding on this other trade, on this new covered call. The stock goes down, I'm going to pocket that $130 on top of the $30 that I just got for rolling. And you get to keep your shares. So if you're already getting close to the point where you're at a long-term capital gains instead of short-term, you get a lower tax rate, maybe you'll pick up a dividend in there. All kinds of good things happen when you hold those shares. So that's what I'll do. I usually don't just buy them back and leave the shares in the portfolio. I'll buy back and roll to a new position. and that protects you. You know, you don't have to give up your shares. What time is it? Somebody told me because I don't have a clock and I don't want to cut the live stream to look at it. All right. John says, 17-year-old in high school trying to actively trade. I was wondering if you have any advice for the new trader like me. PS, watch most of your videos. All right, so John, what I would recommend for you to do is first you want to select stocks that you actually like and figure out what you can afford. Don't fall into the trap of buying cheap shares just because they're cheap. Don't fall into that trap. A lot of people do it. They'll pick up penny stocks because they're cheap and they might go up. They'll pick up companies like Hertz that might go up, so you buy them. First, pick an important stock that you actually want to hold. Is the number one most important. And if you cannot wheel, you cannot sell 100 shares because you either don't have enough money or you don't want to tie up all that cash into it, but you still want exposure, I would recommend buying a leap, which I know I've mentioned several times now, and some people don't know what that is. You can find all kinds of information about what a leap is. LEAPS. Actually, it's actually leaps. Long-term equity appreciation security. Buy a leaps when you have a small account, and you'll get exposure to more shares for a reduced price. And if you want to, you can do what's called a poor man's covered call, which now you are selling covered calls by using your leaps as collateral instead of using shares as collateral. So it's kind of some more advanced stuff, but if you can learn that now as a 17-year-old, you're going to be light years ahead of everybody else. So I recommend pick a stock that you like, buy a leaps, and if you really want to, you want to earn some premium on top of it, now sell covered calls against it. I call that theta farming. I think that works really well for a smaller account. And you'll seem like a genius to all your other high school friends who are just buying penny stocks and losing their money. Somebody asked me what's my biggest gain. So numbers wise, I don't know, it's tough. It's probably my long-term triple Q positions where I'm up like, I don't know, like 60 grand on it, which is freaking awesome. But I'm never going to see that money until I sell, which could be years from now, or I might never sell those things. My biggest percentage gain was, I think it was a little over 1,000%. I was trading drunk, and I wanted to see, I was like, what is a put? I didn't know what that was. It was in college. I wanted to see what a put was. So I bought a put on Dell. Like, it was an FD, basically. I bought it for like $10. And I tuned in later when I was drunk, and it turned out Dell had reported something had gone wrong, like there was a fire or they were delayed on something, I don't know, whatever, some 2013 Dell problem. The stock tanked, and suddenly my put was worth $100 instead of 10. So I made over 1,000% on this thing while trading drunk. I don't recommend that method, but in my case, I got lucky and it worked out. And I learned real quick what a put was. It kind of backfired on me because I got really excited about puts after that, and really excited about calls too. And once I actually started getting a paycheck, I was just dumping my entire paycheck into FDs and just really bad options trades. And I ended up losing thousands of dollars learning how to trade options because I didn't really know what they did. It's complicated material. So I probably ended up losing money in the long term with that put just because it taught me bad habits. But as a percentage, that 1,000% made me feel pretty excited for a little while. All right, Felipe says, how much money do you invest long-term and how much do you trade? I keep about 50-50. So I'll keep 50% of my portfolio in index funds, long-term dividend payers that I just don't trade. Because if you have money in those, you have a nice foundation underneath your portfolio. Whatever you want to trade, on top of that is just extra, it's just icing. Build that foundation with 50% in long-term securities that pay dividends or nice indexes. And then I'll trade 50%. So that's mostly wheeling. I've got a whole bunch of them open right now. I actually have a lot of cash because a lot of my short puts expired on Friday out of the money, and I haven't used that collateral to reinvest yet. I haven't sold any new cash secured puts. But I do want to do that today as soon as I get an opportunity to. And somebody asked me, what is my biggest loss? It's a little bit harder. I lost $3,500 on an Apple FD one time when I was learning how to trade options. I didn't quite understand the concept of in the money versus out of the money. I thought that whenever you want to, you can, you can exercise a call option whenever you want to. But I didn't quite understand the concept. Am I back? Okay. My wife just called me. I gotta go see what she wants. but I didn't understand the concept of paying premium in order to buy a call option. I thought that the trick was just to buy a call at the lowest strike price you can find, because why wouldn't I want to buy Apple at $10? So I'm just gonna buy a call at 10 bucks. And I paid like, it wasn't 10 bucks, it was like 100. I paid $3,500 for it. And I thought, hey, at the end of this, I'm gonna get my $3,500 back, and I'm gonna be able to buy these Apple shares really cheap. That's awesome. Problem is, I didn't understand that if the stock goes down, you're gonna lose all that money. And it did. So I ended up selling I bought a deep in the money call on Apple, and the stock tanked and I lost all my money. Hold on one second, guys. Hold on. She's awake? All right. I'll go get her. The baby's awake. You want me to go get her? I'll go get her.
No, I just
Are you okay?
to help me get
Okay.
something.
All right, here's Maddie. She's doing her thing. We're in the guest room. All right, let's see. What are you trying to do here? You need to get to your next class? Are you okay? No, I can help you. It's okay. Are you good? Yeah, just join the Zoom meeting. Right underneath it is the passcode. All right, I'll go get baby. Just text me if you need me.
Is she awake?
I'll go check now, I guess. Okay. All right. You guys got a quick tour of the house. Here's our travel wall where we collect our souvenirs. Here's our travel wall. Got souvenirs from Texas, Arizona, Europe. These are my coins from the army. Anyway. All right, that's pretty much my life. So I gotta get going because my wife needs some help. But hey, thank you guys for hanging out for a little while. I'll try to do this again another time once I get some little format going on and kind of decide what I want to do in these live streams. But it's been great chatting. And thank you guys that contributed to the live stream or contributed with super chats. You guys are the ones that are making this happen. I really appreciate that little extra cash that I can go in YOLO now. So I'll talk to you guys later. Thanks very much for tuning in. See you next time.